Since the end of February, the stock market, the S&P 500, has already gained nearly 10%. And that's generally what we were expecting. As I mentioned in one of my previous videos, that's from a few weeks ago, there was a good chance that the last short-term daily cycle of the previous intermediate cycle was relatively short, with this knee-jerk reaction in the end of February with a gap low that completely recovered within that same trading day. In one of the previous videos, we've also mentioned this bullish wedge, as well as a positive divergence on the 14-day RSI. As expected, S&P 500 has broken out of this bullish wedge, and the ongoing short-term daily cycle of a new intermediate cycle is now 26 days long. To be honest, this previous intermediate cycle decline down into the intermediate cycle low was quite frustrating. It took me a couple of attempts to establish a position, but by now things do look rather attractive in the intermediate term. In the shorter term, though, the cycle is perhaps approaching its midpoint. Usually the short-term daily cycles last for around a couple of months. So what I expect in the short term is perhaps a bit of a head and shoulders formation or inverted head and shoulders formation on the S&P 500, giving us the intermediate cycle low and a continuation into the new intermediate cycle rally. But in the very short term, again, perhaps another few days higher before a bit of a correction down into the short-term daily cycle low. Usually after a couple of pokes above Bollinger Bands, a correction often takes place down to the middle of the Bollinger Bands. So perhaps a head and shoulders formation that comes down to the 20-day moving average before starting the rally into the second short-term daily cycle and continuing the rally of the ongoing intermediate cycle. So looking at the Optimism Index on the general stock market, S&P 500, we see that the Optimism Index is only at 43. It has recovered since late February, but it hasn't really recovered that much. It's recovered from the low at 20 up to 43. So there is still a lot of space above before we get into somewhat excessively optimistic markets. So in the intermediate term, within the ongoing intermediate cycle, yes, there is still a lot of potential for a significant rally. But again, in the shorter term, perhaps we still have another few days, maybe 1 or 2 weeks up before some sort of a cool down into the short-term daily cycle low over the next 3 to 6 weeks. And you will see the same looking at the CNN Fear and Greed Index. It's right now at 44. Usually the intermediate cycles top once this Fear and Greed Index is somewhere above 70. So we still have a lot of momentum to get into these topping levels. So if you do have a position in the general stock markets, congratulations on successfully getting onto this ongoing trend. It has been quite difficult, again, to establish a position with so much volatility and such a news-driven market over the last couple of months. And of course, for more details on exact positions that we are taking with the members at myfinancesteacher.org on a range of assets, including the general stock markets, different commodities, precious metals, and energy and cryptos, feel free to join us at myfinancesteacher.org. Have a nice day. Bye-bye.